Hey there, welcome to this week's episode of the Week in Review. I have to apologize. I made a promise to you last week I'd have this done on Monday, but if I'm being honest, I was in Orlando as I shared with you for Roman's AAU tournament. We got home at 1:30 in the morning on Monday, and foolishly I gave myself a day with 6 meetings, which is not normal. So nonetheless, I did not have time yesterday to dedicate the time I wanted to towards this video. So recording it today on Tuesday, covering the headlines that may or may not be impacting your financial plan, your life plan and portfolio from last week, and just have a few of them that I'm going to go over. This might be stuff you've already heard about, but hopefully it helps clear up any questions you may have and what it might mean. So let's dive in. And the biggest thing is on Sunday, President Trump announced that there was a settlement or agreement between us and the EU when it comes to the tariffs. We are going to have a baseline tariff of 15% on European goods. They're going to spend some money on our energy products and invest $600 billion in the U.S. So it sounds like what the president was after, he got in this deal, and it apparently is a good one for us. So we'll see how it goes. But it's nice to know that the tariffs that caused all of the drama back in April, rightfully so, are one by one starting to be resolved. Obviously, there's some big ones out there, China being one of those. But the EU is one of our biggest trading partners, so it was nice to see this deal get done. So that's one that we can check the box and move forward and hopefully remove a little bit of uncertainty from the market and from the economy. So that is probably one of the bigger headlines as far as progress with the tariffs and economy over the last couple of weeks. Which brings me to the next article that I have highlighted. Again, all of the articles are highlighted inside of the Santiago Synopsis, which is a client exclusive email. So if you really want these headlines, then you have to become a client of the firm, but I'm sure you can Google these and find these on the Wall Street Journal, which is where I source most of the articles. So last week, the stock market continued to do well, ended on a high. The S&P 500 hit the ninth, for the ninth time in July, the S&P 500 closed at a high. For those of you who like data points in time, that's the most times since August of 2021. So obviously the market continues to do well, shaking off the rough start to the beginning of the year. NASDAQ's doing well, reached a high also on Friday, and had the biggest monthly tally in almost 5 months. So momentum is strong. Those of you that had the sell in May and go away, that is not working for us this year, which is why it's always good not necessarily to follow the old sayings and expect those to always hold true. But this is only the end of July. We still have August and September. September, October typically end up being rough months. So we'll see if maybe sell in May and go away actually still ends up working. And just right now we're in the good period of the summer. So with the market doing well, depending on your benchmarks, up double digits year to date, international markets up even better. You're starting to see some headlines around frothiness in the market, euphoria. Are we having a bubble? We've had bubble talks numerous times over the last couple of years. Yet to remain to see an actual bubble pop. We've seen some stocks pop, but as far as the overall market, thinking back to the tech bubble in 2000, knock on wood, we don't have that, and we haven't seen that in the last few years. But you're starting to see headlines about the market being frothy, euphoria showing up, and there's a couple articles that talk to that. One of which highlighted a few things that investors are paying attention to see if we are in a bubble. Now, experience has told me it's hard to identify when you're in the bubble. Part of it is the euphoria that is usually surrounded. People are excited, buying investments, everything's working. So it makes it hard to see it in the moment because our psychology wants us to keep on going with the dopamine hits of making good investments and seeing our net worth at all-time high. But also it's not until hindsight, it's not until. So there's been many times there have been concerns of a bubble that nothing ever popped. That yes, there might be an adjustment. We may have a correction. We may have a sell-off. Those are all normal things to have in the market, but it doesn't mean that we have a bubble building up. But what are they looking at? Do you need to be paying attention to this? Totally up to you. Obviously, I keep an idea of what's going on, but I'm not following these super closely. But one of the things that has people thinking that we might be in a bubble is speculative stocks or heating up. I'm going to talk about that in the last article a little bit more. But think back to GameStop, think back to AMC during COVID and how Wall Street Bets was able to wreak havoc on those who are selling short, which I'll talk about, explain that in the next article. But had those prices going crazy, way more than the companies were worth, but supply and demand in the markets They were able to I'll say manipulate. That's not a good word in investing, but kind of influence, if you will, the price of the markets. We're seeing more of that. I'll highlight a couple of those in the final article. Crypto prices are doing well was another thing they cited. Now, I'm not so sure this time around that the crypto run is, it definitely is a speculative investment. It's not one that I think you have to have. I also don't think it's one that you shouldn't have depending on your risk tolerance, your expectations, the why behind buying it. But if you go back to 2000 and everything that was going with crypto, with NFTs and everything, that seemed more kind of bubblish. Where this time, with the prices of Bitcoin and Ethereum growing, it appears to be a little bit more of a real reason for those prices appreciating. You have governments adopting, having Bitcoin on the reserves, companies doing that. You're starting to see these things actually be implemented in the businesses that were not using them in the past. So I think the adoption and the acceptance of this, and also that the asset class has been around for a while, I don't know if some of the crypto prices are speculative. Obviously, there's always going to be the coins that they call the shit coins. Those are going to be very speculative, but looking at Bitcoin, looking at Ethereum, looking at the adoption there and holding, I don't know if those price appreciations are bubble. I think that might just be kind of a shift in adoption and acceptance that this asset class is not going to be going anywhere, and that it has done very well for a very long time, and that people might need to be considered allocating to it, which is going to drive prices up. So I'm not so sure that all of the crypto space is signaling to a bubble. My opinion, my thoughts. My two Satoshis, as my good friend Tyrone Ross would say. And if you're a crypto person, that makes sense. Breadth of the market is another thing. So the breadth of the market just means there are more stocks that are doing well. You might hear people talk about the Mag 7. Those are, Microsoft, Apple, Meta, Tesla, I think was in there for a while. I forget what all the Mag stands for. Google. Those big stocks that people know, Nvidia. For a long time, a lot of the market's growth were just with those 7, maybe a few more stocks. But here we're seeing the market growing across the board. And the belief is that if more stocks are appreciating and growing, that's a healthier market. But if more stocks are growing, then are people bidding up companies that shouldn't be at that price. So the breadth improving, I think, is a good thing, but also it could be signaling that things are heating up, that some of the growth is spilling into areas that don't warrant it, and markets are rising in areas that shouldn't. I think spread around is actually a better thing, but again, everybody has their own opinions. And then finally, something to be paying attention to of is this causing the heat up of the stock market, is the economy is holding firm. Again, that's another positive. We want the economy to hold firm, but that could lead to the euphoria in the market that obviously is attributed to bubbles. Do I think we're in a bubble? Maybe this is going to age bad, but I don't think that we are. At least not yet. I think that maybe we're a little overheated, but to me, bubble is significantly overblown, nothing backing it, and then it's going to pop. So you think about it, in 2000, there were a lot of tech companies that had no earnings, the dot-coms that were not even really businesses that raised all this money, and there was nothing behind it. I know some of the crypto skeptic people will say that about crypto, but again, when I think about Bitcoin and Ethereum, the two main ones, I think that that's different. So I don't think it's bubble. I do think that maybe from April till now, we've had a really good run. The April recovery to now was actually, I didn't verify, but I heard, and I believe it from this source, the April recovery was even faster than the COVID recovery. So we have bounced back pretty quickly from the tariff scare. Yeah, we could surely be a little bit overpriced right now, but earnings are coming out right now. This is a big week with earnings. We have Apple's reporting, I think Amazon's reporting, with the Federal Reserve on Wednesday. So there's a lot happening this week that could lead us to have a little bit of a pullback, which is totally healthy. And really, we do want pullbacks because those pullbacks and even corrections are healthy for the market, which prevent a bubble from happening. Bubbles are being too inflated, and if we have corrections, we have retracements, giving back some of those gains, that is healthy environment for the market. I would not be surprised to see something in the next few weeks where there is a little bit of a sell-off to digest in the summer, the great summer, and then set things up going into the end of the year. Not a prediction, not investment advice. Don't do anything because I said it, but just giving you some thoughts of what I think, and I think it's important to understand what I think in my opinions. All right, so the final one is the meme stocks, going back to the first one I talked about with this concern about a bubble. So I mentioned GameStop and AMC back in 2020 with Wall Street Bets, the Reddit room, and the Hello Kitty, I think it was his name. I forget his name. Slipped my mind. But anyways, running up the price of those, trying to take it to corporate America, and basically penalizing and attacking companies that have a lot of investors shorting them. So shorting a company is basically where you're placing a bet, an investment bet, where you think the price of the stock is going to go down. So those investors that are short profit when the stock goes down. They have to borrow stock to make this happen. And one of the risks of being a short investor is they call them short squeezes. When the price starts to go up, a person who is short starts to feel the pain. And when there are not enough shares available to access to repay these borrows that were done to short, it drives the prices up. So one way that the investors in the Wall Street Bets kind of world are identifying companies that have a lot of people who are short and trying to take advantage of the limited supply of stock that's available. You buy it, the price goes up, it squeezes the shorts, which drives the price even more. There are people who are saying this is market manipulation. There are people who are saying it's not because it's all happening in public. You can't necessarily control that if somebody posts something, whether or not they control the market or not. I don't know. I'm not a huge fan of necessarily doing that, but I understand why people are doing it. They're frustrated. They don't feel like they have the same opportunities as Wall Street does. So if they get an opportunity to take advantage of it, they want to make money as well. And they want to, get Wall Street back. So I understand the narrative of that if that's part of the reason why. But I also just think it's an opportunity to make money, and they're exposing a weakness in the market, a place that they have an advantage over Wall Street. Wall Street is always looking for where do they have an advantage over other investors so they can profit. So it's kind of giving Wall Street a little bit of their own medicine. Right now, Kohl's and Open Door are the last two stocks. Again, not investment advice. I'm not telling you to go buy those stocks. Me personally, I don't get into the meme stocks. That's a very volatile, a very risky situation. There have been people who have made a lot of money on it. I look at it as a gamble. I look at it as a bet. And I don't gamble on sports, and I'm not going to bet on sports either. So that is true to who I am and my risk tolerance. But there are for everybody who's made a lot of money on the up of these, there's been a lot of people who have lost a lot of money because they buy when the price is popped, and then there ends up being, the next day it's down 10 to 15%. And there's people who bought at the high. So, again, risk tolerance, your goals, what do you need your money to do for you? What is the biggest thing you're trying to achieve? Should you be investing in meme stocks? My blanket advice is probably not, but that doesn't mean you can't have some money that you could allocate towards taking a bet. So instead of going to the casino, instead of buying a lottery ticket, you want to throw some money into a meme stock, knowing that it could go to zero, and if it goes to zero, you're okay, but if it does really well, you get a little bit of luck. I would not say that's not something that you shouldn't do, but you have to be very careful with doing that. So if you are considering buying and investing in meme stocks, I think it's important for you, first off, to consult the person you're working with that helps you with your planning. I think it's important for you to consult your financial plan. Where does this fit in? And then have a real conversation about why are you wanting to do this? Is it out of greed? Usually greedy decisions do not pan out well in the long run. Is it something that you really think you have an investment thesis for, and you've researched it and you want to do it? And then the amount of capital that you're going to apply towards it, is it an amount of capital that you can have get cut in half or go to zero without jeopardizing your plan? Because again, the whole reason we do all this planning, the whole reason we're investing is so we can reach our goals. Unless your goal is to make the most money possible and take as much risk possible, most of us are trying to grow our money in a way that allows us to live a good life, give us freedom, give us opportunity without taking on too much risk that we can lose it all. That's why meme stocks, or even getting into the crypto space, doesn't make sense for everybody. So just be aware that that's going on. You might hear about these stocks in the news. There may be a new one next week. Really think twice before you put money into those stocks about why and how much you're putting into it if you're going to do it. Again, one final time, not investment advice. I'm not telling you to go buy those stocks. I am not buying those stocks, but it is something that you're going to hear people talk about. And if this continues, there will be more of it, and it will be even more enticing for people to jump in on these things because of FOMO. They're afraid they're going to miss out. They're not making the gains of other people. Go back to your why. Why are you investing? Does this align with why you're investing? If it does, then maybe take a stab at it. If it doesn't, then just be okay, because there's no guarantee that you're going to catch the upside of it. And if you don't need that to make your plan successful, then why take on that risk? All right, that is it for my commentary on the meme stocks. Again, not recommendations. I want to thank you for tuning in. I'll be back next week. School starts up next week. Schedule should be back to normal. No travel coming up. So this next video, the next weekend review, should happen on Monday like normal. Santiago Synopsis will be out on Monday with it in it. If you have any questions, always feel free to reach out. But thanks for tuning in. Volume 2 of this new round of the weekend review is complete. I hope you have a great week, and we'll see you in the next one.